NFP is our featured sponsored guest today, and the topic, like you see on the screen, is One Size Does Not Fit All, Auto Dealer Insurance. Today, opening up the session is Keith Deans, Executive VP and Chief Operating Officer at Strategic Source. And Keith, I'll go ahead and turn it over to you.
Well, thank you, David. I'd like to welcome everyone to another Strategic Source Innovative Supplier webinar. Almost a year and a half ago, we began presenting webinars from some of the exciting suppliers that we identified. And since that time, we've actually delivered approximately 35 webinars. And again, the goal being to introduce suppliers and solutions to drive both cost reduction and revenue generation and ideas with regard to processes and procedures. Today, we have another exciting supplier to share with you, NFP Insurance. And we have Lou Nanny and Paul Baldwin that will be taking us through some considerations and recognizing that, you know what, sometimes you need to customize your services. And guess what? When it comes to insurance, one size does not fit all. So we'll have them share their insights on that. One thing to keep in mind is that a video of this webinar will be available in 24 hours. And with that, I'll turn it over to both Lou Nanny and Paul Baldwin to talk about how they can customize an insurance service for you.
Awesome. Well, thank you, Keith, for the introduction. Thanks, Dave, for helping assist to set this up. As Keith mentioned, I'm Lou Nanny. I run the Minnesota NFP Property and Casualty Insurance Division. And I'm the relationship sponsor and kind of the liaison between NFP and all the services we provide, as well as Strategic Source. So kind of to give a high-level overview of the agenda today, I'll uncover who NFP is, how you can help your broker help you, what types of insurance to look for, be it pricing, coverage, what kind of buyer you are, go over a few of our methodologies that we use in our insurance endeavors, and as well as speak to some alternative revenue sources and revenue generation from the F&I department. So here we have a poll. And it just asks if you are a price-conscious buyer, coverage-conscious buyer, or both. There's no right answer, but we know that there's a diatribe between the two types of buyers, and we're just here to help you uncover which type you are.
And let me know, Lou, when you'd like me to close the poll and share the results.
I think we should be good to go.
I'll end that poll, share the results.
As expected. Nice. Perfect. Well, we had everyone supply both, I believe, which is as expected. There was no right answer, but that appears to be the most right. So who is NFP? NFP is a full-scale brokerage of about 7,000 employees. We're about $2 billion in revenue, but we operate like a small boutique brokerage. So we run the gamut from property and casualty insurance, life and benefits, wealth and retirement, key man, estate plan, you name it, we have it. But this webinar is strictly devoted to property and casualty, as well as the inclusion of F&I. So how we're different from, most brokerages around the world is that if you're in the middle of the pack, you're typically gobbled up. If you're smaller, you may be a little too small, but you do have good markets and capabilities, but you might not have the bench strength. But if you're a large global broker, you might not have access to some of the boutique carriers, nor oftentimes do they seem to care about anyone that's under 100,000, 200,000 revenue producing for themselves. So we like to think that we fit right in between those two. We found a sweet spot. We've had a lot of success doing so. So now this is how you can help us help you. Our ask is just to be transparent. Begin the dialogue 4 to 6 months in advance so we can better portray you in the light of the underwriters and the carriers and best fit your renewal needs. And that way it's not a time crunch come renewal time. And we fully expect the client to be involved, albeit the level of involvement, if we have the full attention, is not dragged out. So it should be very short and concise, but we like to service it, 365 days of the year. We place the cover 30 days to renewal, so that there's no last minute binding necessity. We're in constant communication with the markets and the carriers. And as mentioned, we like to prepare and gather the information about 4 to 6 months out. So the auto dealer industry trends has even been more exemplified by, Hurricane Ian and all the natural disasters. But it's as fluid as ever, and carriers are entering and exiting the market, adjusting prices, and they even change some of the terms and conditions regardless of if it benefits the client or not. But you're just a piece of their puzzle, and it might not always benefit from their changes. So we advise not marketing every year, but marketing every 2 to 4 years, so that you can get a better lay of the land on where you are. The reasoning for the higher than normal increases as of the last 2-3 years, obviously being auto dealers, that the replacement cost of vehicles has gone up exponentially. The increase in claims nationally has been driven a lot by cyber and umbrella, especially with umbrella being follow form and needing to be pierced in order to pay out. But with the cat losses, it certainly has been pierced. And then obviously increase in revenue and payroll. Revenue is almost directly tied to general liability, and payroll is tied to work comp. So as those go up, it's great for the business owners, but it's something to be aware of that you're going to see increases as well in your work comp and GL. So for our marketing method, we have 3 methodologies. One is the MGA and direct writers. So if you work with Zurich, Ally, any of those carriers, what you notice is that you're being contacted directly by the MGA. And oftentimes they just pigeonhole you into working with them and promise the best rate. But what we can do is act on behalf of you as a consultant, and we'll work with multiple different MGAs, and we'll make sure that we're able to get some quotes from all of those, lay them side by side in a coverage and premium comparison, and make sure that you're well taken care of and not being taken advantage of. Now, one thing to note is that we are not recognized as broker on the claims or service, which obviously you should know that. Being with the MGA, you work with them directly. The open market is one that is very fluid, and there's a few select markets that truly do like the garage keepers, the open lot, and all lines of business. So if we advise that it is going to be conducive to your insurance renewal to go to the open market, that's where we'll take it to all the markets that have risk appetite for your given risk. And we will be recognized as the broker on this, assisting with claims, adjustments, modifications, endorsements. And last but not least, even regardless of size, a captive can make sense, even as it pertains to benefits for employee benefits. But we've got a great captive team. We can act as a TPA. We can just manage your captive, and we can help form them and domicile them in the location that would be best suiting from a tax purpose for you all. So from here, I will pass it along to Mr. Paul Baldwin to go over a few case studies, and he can help wrap it up. Thanks, Paul.
Okay, thanks, Lou. As Lou was saying, I think he covered very well what the process should be, but it begs the question, okay, I go through the process, what can I expect? So here's a real-life case study, an Arkansas-based car dealership franchised with 4 locations, and they were asking us to evaluate what's going on with their insurance. They felt like they were overpaying and so forth. So after a comprehensive dive into the contract language, we identified areas where there was actually duplicate or double coverage, and we were able to save a considerable amount of money on their physical damage. Now, the way these sometimes happen is you might have a floor plan statement or coverage through the bank that you're not even aware of, and it's called a wraparound endorsement. So without double checking with your lender, be that the Ford Financial Services or a local bank, double checking those things to confirm where the coverage lies, and also with your garage liability provider, if that garage liability provider is picking up some of your inventory, there can be duplicate or redundant coverage. And now more than ever, you need to look into those things, have your broker do it, and truly evaluate how my premium spend happens on an annual basis and confirmation of where coverage begins and where it ends. Here's another example of 5 locations in New Jersey. Just another example of where they asked us to come in and talk to them about where their losses are, what loss control services could be implemented. And loss control used to be kind of a buzzword that nobody paid attention to, but now it is critically important that you actually have a handbook and guidance for every single employee, because when you convey that to the carrier, to your broker, you are telling the story of how your dealership operates and the methods that are in place to mitigate potential claims before they get out of control. Underwriters are very good at the science of determining an exposure, whether it is something they can likely expect a frequency of or perhaps a severity of. What they're not very good at is understanding the art and nuance of the dealership, and that's where you come in being your own advocate. So in this case, we helped steer someone through all of those unknowns. We're able to communicate that to the underwriter, that there was proper process in place to mitigate those potential exposures and claims before they blew up and became huge on the loss performance statement and reduced their overall premium in the process. So it's just a matter of rolling your sleeves up, identifying what the issues are, confirming where the dealership takes ownership and the staff is well trained, and there's documentation in the form of a handbook to confirm that. So another successful story where the dealership took ownership of it and we helped them steer through those critical issues. The next step is in F&I. Lou touched on what NFP is in the total environment of property and casualty, employee benefits, and so forth, but I'd like to transition into F&I. F&I represents about 45% of the revenue in a franchised dealership. We have a specialty boutique division of our company. We currently work with just under 200 car dealerships nationwide. We are independent in the sense that we have the ability to go out and represent any product that we vet and determine meets our standards and provides value to a dealership. We focus on the things that we sort of take for granted at the dealership level, income development and products, but we take a comprehensive dive after a review and consultation with the dealer to determine what elements in that F&I process need to have the most focus to ultimately hit the preferred outcome. In the past, and I go back a long, long ways, back when credit, life, and disability were the primary products that were offered in the F&I department, the dealers would simply look for the highest commission that they could participate in the credit, life, and disability. Vehicle service contracts were relatively inexpensive, and nobody had heard of or thought of gap insurance back in those days. So it was primarily finance reserve and credit, life, and disability, and then further down the road was vehicle service contracts. That has changed dramatically. It continues to be a little bit in flux. The last couple of years, we've had dealerships increase their labor rate and service department. Parts have increased. There's delays in those parts. So vehicles that are in for repair for a covered item under the vehicle service contract are in loaner or rental cars longer. And the average repair in the United States has increased almost $500 just in the last 4 years and is estimated to increase another $350 in the next 2. So we offer the services to help dealers go through all of what's happening in the car business, help them maneuver through those issues, and then determine what are the critical success factors and outcomes they're looking for in their dealership, and then help make that become a reality. Here's an example. I know this is hard to see, and I apologize for the font size there, but I know it's going to be available after this discussion here. But typically what we do is we will go in and rate vehicle service contracts as a primary conversation point. We just pull random vehicles at a dealership. If that dealership focuses on late model used cars with low mileage, or if a dealership has a used car inventory with considerably higher miles, just depending on their geography and the market that they serve, we'll pull the vehicles and determine what is the best course of action for them to consider if their customers are coming in and financing longer term. And we generally find that to be the case nationwide. Pre-pandemic, I'm sure many of you have read in NADA, for the first time in United States history, SUV and pickup truck sales exceeded any other vehicle, and there was no end in sight, but it did slow down a little bit now with rising gas prices. So those dealerships that are carrying pickup trucks and SUVs that still have a very high value to them, customers are financing those longer, and we'll do drill down statistics to determine what their capture penetration is on products when you get up into those higher mileage vehicles. So it is a consultative tool and an analysis of performance to begin the conversation. It looks like, do we have some questions popping up on my screen here?
All right. Thank you, Paul. And we got right through the content pretty crisp. So we have some extra time for Q&A now. Everyone, there is a Q&A button at the bottom of your screen. Click on that to type a question in here for Paul or Lou, and we'll try to answer as many as we can. All right, let me see. Let's begin with this one. How do I know if I have the right insurance coverage for my dealership and that it's priced competitively?
Well, if I could have $1 for every time that question is asked, it's an excellent question, and it has changed over the last 20 years, and I'm dating myself in this industry, but 20 years ago, there were probably 20 different providers that could beat a path to a dealer's door and ask them if they could quote their insurance somewhere around the anniversary or expiration date of the garage liability policy. If we go back 10 years, there might only be 10 carriers remaining, and now it varies by state. So some carriers, direct writers and others, have exited states where there's high exposure to hurricanes and other flood and open lot exposures. They no longer even want to write the insurance risk. So the very first thing you need to do to know you have the right insurance is be your own advocate. And I would suggest you interview that person who contacts you and asks the question, hey, can I quote your insurance? Or according to our records, your policy expires on June 1st, and I would like to participate this time around. May I? Simply ask the question, why should I let you? And if that individual can answer the question, that they take a comprehensive dive, they sit down and consult with you and determine the weighting factors behind how you want to protect your business, you know you have somebody who takes themselves seriously. If you have somebody else who says, hey, I don't want to bother you too much, if I could photocopy your policies, you give me a copy of your loss information, I'll get back to you in like 30 days. That's a transaction. That doesn't determine what is the right fit for your dealership. And it really begs the question, how serious does this person take themselves, and how well is the policy going to be written? If I'm assuming that the replacement cost analysis and limit in the policy is the correct one, somebody else did that work. And I know that 2x4s cost a lot more money today than they did a couple of years ago. And when was the last time that you had a comprehensive evaluation of your business done? But there are other areas too. You can take your exposures and determine which ones are the most important to you. Most of the time, people just apply whatever is in that policy to try to sharpen their pencil and be attractive in pricing. But you can use losses, your risk management strategy, and your deductibles as tools to leverage against ultimately the cost of the product and the construct of the product. And I would argue that the things that have historically cost the most money to underwriters are the things that unfortunately very little thought goes into. Is my employee dishonesty limit correct? Well, it should be extremely high based on the types of claims that get paid, number one. And number two, do you have the correct measures in place, or do you just rely on somebody in the office to take care of the books, and that you don't have a backup and you don't have an independent auditor or anybody else come in and take a look at your dealership from time to time? So get involved early, ask for the loss information, interview the person that's beating a path to your door, ask them questions like, hey, what are my losses in relation to the premium I've paid? What are your target objectives for loss ratio? How am I performing? Nationally, how are the rest of the dealerships performing, and am I getting the correct credits and evaluation of my dealership? And those are really the best ways that you can answer those questions.
All right, I see some questions here, but we invite more to come in. Go ahead and click on the Q&A button and type in a question, and we'll try to cover each one. So let's go on to this one. What is a good PVR to maintain in my F&I department?
Well, lately it's been huge. Anybody on this call knows that front-end gross got recaptured in the middle of the pandemic. Customers were eager to come out and buy vehicles. There was pent-up demand. There were fewer opportunities to push back. Many vehicles were pre-sold by the time they got delivered to a dealership. But the PVR to maintain depends on where you're located, what your franchises are, and what is your F&I system. The more important decisions that have to be made is how closely am I going to monitor this, who's in charge of it, and what is in the number. I have seen some incredibly high per vehicle retail profit numbers in the last couple of years, but when I break them down, they're heavily weighted toward gap and vehicle service contracts and so forth, and even finance reserve again. But if you get into certain mileage segments and automobiles, they're not selling a service contract at all because maybe they don't have one that's available to go full term, or the one that they offer is incredibly expensive. And so you have a customer driving off the lot in a vehicle that's financed for 60 or 72 months. It's out of factory warranty. And you just made a lot of money on gap and finance reserve, and you're holding steady on a number. You really have to drill down in that, determine how you want your store to be perceived in the marketplace, how you want your customers to be treated, and how you want the training in the F&I department to make sure that those value propositions are clearly defined and those numbers are maintained. And I've always been a believer, if you have the right offensive system and the right people out on the field in a football game, the scoreboard takes care of itself. So that PVR becomes a byproduct of well-run, well-managed system that's at the dealership.
Okay, let's continue on with this one. How often should I request loss reports from my insurance provider?
Oh, that's another good question. It ties back to the first one. I would say at least twice a year. In the past, it was viewed when you requested loss information that you were going to take a bid or a quote, and the incumbent provider got nervous and they dragged their feet, and anybody who was wanting to participate and evaluate your insurance was waiting for that report, so they knew historically what had happened at your dealership. So I suggest that you keep a folder, you put a yearly tab on that, you separate those tabs, and you just keep that permanently. Ask for it twice a year, once in anticipation of the renewal, and then once halfway through the year, and just get it on your schedule. And then when you get the loss information, demand an audience telephonically or in person to review those. There could continue to be open reserve claims that haven't been paid. There could have been incorrect statements of claims that were paid that weren't paid. And that is a key driver. Think of it as almost the dealership's FICO score. We all know that Fair Isaac is a scoring tool that determines your viability as a person to have extension of credit. But if you think about your claims frequency and history, that determines the viability or likelihood that you will be underwritten favorably to have a garage liability and open floor plan offered to your dealership. So knowing what's in those numbers is critically important, a minimum of 2 times a year.
All right, and here is another. I'm thinking about setting up a reinsurance company for my service contracts. What is the best way to do that?
The best way to do that without question is first decide how involved you want to be in the performance of your F&I department. If you want the factory or another provider, a core service contract and gap provider, to have and make those decisions around when claims get paid and repairs are authorized, then negotiate around the best price and the best participation. However, I have found that most dealerships and dealer principals in particular, even if a claim is denied, they do have a program or an authorization that an irate customer can go to a GM or to the dealer themselves and demand some sort of participation, and more often than not, the dealer ends up paying a claim when it isn't covered. If that is the philosophy and the experience of the dealership, then you have been directing your own service and insurance participation and outcome. And if that's what you're willing to do, you're leaving money on the table because the core companies that are representing your products have a loss ratio objective of around 50 or 55%, and they've got pretty heavy administration fees. So the best way is to determine whether or not you truly want to run your own insurance company. And if you do, who are the best companies to help guide you through that process to determine the structure of the reinsurance? How is it going to be evaluated to make sure you have enough reserve in those reinsurance accounts? What is the favorable tax treatment of those monies? And then ultimately, what's the long-term objectives? We've had dealers successfully set up reinsurance programs with us that they use as a funding mechanism to acquire other dealerships, or just some property they're interested in, maybe a chunk of land out someplace that they want to use in the future, or certainly as a additional wealth building tool. So the first step, if you're asking the question, is you've seriously thought about it. So there must be some heartburn somewhere. And the next step is determining how you can alleviate that heartburn with a path to get around what the factory is doing, and then identifying the right products and structure for the reinsurance to complement what's going on in the store and long-term performance for you and still taking care of your customers.
We still have time for further questions as we're just approaching the bottom of the hour. Keith, I'll bring you on in just a moment for any closing comments, but I did want to remind people that we'll have a post-session survey we'd love to have you stay on for. Just 2 questions to get your feedback on today. So I don't see any other questions here. Keith, could I bring you back on here to close the time?
Sure. Thanks, David. Well, Paul and Lou, I just wanted to say thank you again for coming on and participate in our Innovative Supplier Series. I think definitely some key points that I know that I took away with regard to applying, I think, the topic, and that was today, that certainly not all insurance is the same. And if you're thinking about potentially changing your coverage, it's not something you want to do at the last minute. You want to start 6 months out and always keep up-to-date documents with regard to loss ratios from your current provider so that you're prepared to make a change. And when you interview that new supplier like NFP, that you want to really ask some serious questions that can complement the evaluation of your current program, and more importantly, customize it best to fit your needs. So thank you again, Paul and Lou, for coming on and sharing those insights and some of the best practices and procedures surrounding insuring a dealership. So thank you again. One of the things that I would say just as closing, and this is an area, and this is why we had NFP come on today, and that is it can be critical to the success of sustaining the profitability of your dealership or your organization. And so we'll continue to bring innovative suppliers. I want to let everyone know that a copy of this webinar will be available in approximately 24 hours. If you're interested in receiving a copy, please contact Chris Austin via text. I think you'll see his phone number right there on the screen. It's 612-386-3898. If you're more comfortable with email or you want to request it that way, obviously you can contact him as well at sales@strategicsource.com. Again, take a look at our Strategic Source website. One of the things that you'll see is I'll see a list of all the innovative suppliers that we've had on here in the last year, like NFP, that have talked about different solutions and different suppliers that will help you maximize the profitability of your organization, reduce cost and risk. And so we invite you to contact us to be able to assess your indirect expenses so that we can help you make your organization more profitable. Again, we'd like to say thank you again for joining us today. Be on the lookout for our next Innovative Supplier webinar for November to learn more about how we can help you and your business become more profitable, reduce risk, and save time for you. Thanks again, and we look forward to seeing you at a future webinar next month.
All right. Thank you, Keith. And thank you, Lou, and thank you, Paul, and everyone who attended today. We have the post-session survey up. We'd love to get your feedback. So we appreciate everyone's time, and we look forward to you joining us on future webinars with Strategic Source. Have a great rest of the week, everyone.